Hey guys, Young here. So today I'd like to share with you guys a recording on one of the stocks that I'm actually looking at. In fact, I already have positions in it. It's a rather high risk stock to me to actually share with you guys because it actually costs above $100. Although I did actually put out a video before that you shouldn't look at the price, you shouldn't look at the stock based on its price, right? But still $100 may be very expensive for a lot of you guys, and selling a put option is almost $10,000, right? So that's why I consider it a little high risk for me to be sharing. But nonetheless, the reason why I'm sharing is because I see opportunity in this stock. And even though I'm saying I see opportunity, I want you guys to do your own homework. Take the next 2 days to actually do your own research on the stock to make sure that this stock is really suitable for you before investing. All right, so as we look at the market today, we see that actually Dow Jones is attempting to challenge the new high already, so that's quite good. Market is reaching its all-time high, so there's strength in the market. Not like this time where we see like small candlesticks. This time around we see bigger candlesticks, which is suggesting momentum in the market. So that's good. First and foremost, overall market has strength. And today I want to share with you guys this stock called Raytheon. Alright, so Raytheon is a stock which I actually did a video previously of just a few days back, but let me just give you guys a quick update, quick overview about Raytheon. So basically Raytheon is an aerospace defense company that focus on creating manufacturing those missiles like Tomahawk missiles, etc for the military, the US government, and a lot of other governments and military around the world. So they are one of the largest defense and aerospace companies that actually build this kind of defense capability weapons lah. Okay, so they are weapons manufacturers, something like Iron Man, right? Iron Man, the Tony Stark, right? So that his company, by the way. So it's something like his, but it's just in the real life, not in the Marvel universe. All right. So a quick overview about Raytheon is that a few days ago, just last week, 2 Iran oil tankers were being attacked, and immediately US government say that Mike Pompeo actually announced, go on media within a few hours and say that it was Iran's the military intelligence suggested, and actually show footages that is from Iran. Although there's some conflicting things whereby, because they also shot down one of a ship which is something to do is affiliated to Japan, and just nice Japan's prime minister was there. So that's a bit of a conspiracy theory going on, but we don't really care about this conspiracy theory. We just want to care about facts, truth, and what's happening, how the market is taking it. All right. So last night what happened was that Donald Trump actually approved of a strike in Iran. Is actually a strike before dawn, so that it actually minimize the casualty on the military and the civilians around the area. So his plan was to shoot down all the radar places and those military capabilities of Iran. But then it was immediately pulled back. The planes were all in the air already. The missiles were all lock and loaded on the planes, and were halfway through to Iran already, and halfway through they actually cancelled the whole operation and bring the planes back. All right, so no shots were fired, everything was good. And yeah, and that's why you can see some kind of a tension going on because of all this oil, right? And last week I actually made a video on United Technology and Raytheon announcing an all-stock merger. So with this, they're actually creating a new aerospace company which owns like, I think 46% of the share, 40-something% of the share, while United Technology owns another one. So a combine of this company will have approximately $47 billion in pro forma sales. Means in 2019 sales, they'll potentially actually have $74 billion. And yeah, so Raytheon actually owns 43% of the shares on a fully diluted basis. So that the merger is expected to close within the first half of 2020 already. And I read some articles that the DOJ did not see any conflicting things that's going on, so they most likely is going to approve this merger. So that's a very huge thing, huge opportunity for Raytheon. And Raytheon actually went on, United Technologies and Raytheon actually went for the Paris Air Show and something like that. I can't remember the real exact title. And the comments that the CEO made was so positive that the stock actually started to come back up again. So now let's take a look at Raytheon and the overall financial. So you can look at Morningstar, quickly go over to it. You can see straight Morningstar here has 4 stars, suggesting very strong moat. We can see like the revenue all is doing well, gross margin, everything, EPS, dividends, payout ratio. But then again, there's too much numbers, there's so many tabs, we don't know what to exactly see. And what does all this means, right? So what I have here is actually I have a calculator here that I actually developed from scratch, everything from scratch. So it tells you exactly what Raytheon's about, what Raytheon mode. You can see that it's very close. Even the mode here is very close to how Morningstar gauges it. We can see the financial health, which I'll show you guys later, the leverage and liquidity, the profitability, the valuation. So it's also covered by 17 analysts, and using their analyst coverage plus several financial models, we determine an intrinsic value of $130.82. Now this would be the value buy for Raytheon. If stock price goes below this price, this will be the value buy. Anything above it will most likely be considered a technical buy. Alright, buying based on technical perspective. So this is what I'm actually doing. I'm buying based on technical perspective because I actually see some opportunity in the stock. Raytheon now currently has a market cap of $50.91 billion, but as we see over here just now, once they combine it, the other company will actually make $74 billion. So that's potentially a huge increase on their potential revenue next year in 2020 once the merger is completed. So that will significantly increase their market cap. PE ratio 17.06, the PEG is 1.34, slightly overvalued on both P and PEG perspective. The dividend yield give out a 2% dividend yield. Alright, so when we look at the 5 years assessment, we can see very quickly that what are some things that Raytheon is doing very poorly. We can see that the gross profit margin is rather poor. We're looking for 40%. It's actually 27.6%. Operating margins, we're looking for 20%. It's actually 16.8%. But overall, the net profit margin is 11.10%. So that's a huge positive added value stuff, considering the gross profit margin and operating margin were kind of below our expectation. Net profit margin still exceeds our expectation. Overall, we see that positive net income, earnings per share increasing 11.2% year over year. Earnings per share also increased to a 3.5% quarter over quarter. Return of equity is beyond our expectation. Return of assets also beyond our expectation. Positive revenue performance quarter over quarter, year over year. Positive free cash flow. They issue dividends, payout ratio. The only thing that's not really good is their current ratio, but that's a very small portion, because let's take a look at this. Their long-term debt and the debt to equity ratio, long-term debt to equity and the short-term debt to equity ratio is below 0.5. Now when you compare this with companies like, for example, let's take a look at Boeing. Alright, when you compare with Boeing, right, so just give it some time for you to load. You can see that Boeing's debt to equity ratio is significantly high, super high, right? This is also another defense company. Let's compare it with companies like maybe General Dynamics, right? General Dynamics is also another company that does all this kind of aerospace and defense stuff. So you can see the debt to equity ratio is also significantly high. Now Raytheon, on the other hand, has very low debt to equity ratio, which is something positive that we can look at. Then we look at the dividend growth. Dividend actually increased 94.09%. So that's actually that's dividend growth year over year. So that's good. If you hold it for 5 years, if you've been holding it since 5 years ago, you would actually make 92.94%. That's almost 100% gain in your capital. All right. Now take a look at the technical perspective. We see that the short-term support line is 167, which is slightly below here. So you can see, if you draw an imaginary kind of a support line, you can see slightly is below here, around here, and you can see that the short-term resistance point is 194, which is around this purple line over here. All right, then we can see the competitors. Currently, analysts are overweight on Raytheon, which is a huge thing, because analysts are very positive on it. This is the 3 months. 3 months ago, they are very positive. 1 month ago, they are positive. Currently, they are also positive. All right, so few things to note is that there's some analyst firm that downgraded them lah, but it's okay lah, because overall they're still overweight on Raytheon. We see these as the competitors. So here's an interesting thing that I like to highlight is that okay, two interesting things. So first and foremost, we actually received news that the Federal Reserve plans to cut interest rates, so that's very positive on companies, especially like Raytheon, because Raytheon has very low borrowings, right? So they can actually take this opportunity to borrow more and expand out more, and then potentially make their business even better, even expand their business faster over the next few years. And so we'll take a look at why is this opportunity, why am I talking about it now? So basically, when they actually announced the merger, right, the stock actually ran up super high, and then it fell all the way down, almost, let's see, 193 then to 177. That's like a almost $14 drop in share price, right? And after which, on this date, the market tried to go all the way short. All right, but then buyers step in and buy back up again. Now next day, Raytheon tried to go even shorter, and then the buyers come in and buy it all up again. All right, and then on this date, the market, you can see it's kind of like balancing in between. And on this day, the market actually, if you go back in time and see, right, the market actually went all the way down pre-market, all the way to early stage of market, and by the time it closed, it actually went up again. Now, I want you to think of this in a buyer and seller perspective. Now, if you are a long buyer, when you see this kind of thing, candlestick, what would you think of, right? And if you're a short seller, what would you think of? Now, I can tell you for sure that if I'm a short seller, I would be very afraid to be shorting this market. Why? Because every single time the market tries to short this Raytheon stock, right, buyers step in and buy it all up again. No matter what you do, the next day you try to shut it all down again, buyers come in and buy again. The third day you attempt to shut it down again, buyers bring it up again. Fourth day, short it again, buyers bring it up. Every single day you short, the buyers step in and push the price higher. All right, and that's why I actually make a position somewhere around here, where I actually enter the stock around here, around this candlestick here. Yeah, because it's a confirmation candlestick fight by all these things, where I see all this rejection and long wicks, confirmation candlestick over here. All right, so this to me, it's from the technical perspective, it is a very strong buy. Furthermore, we have actually break out from the 200 days exponential moving average, which is supposed to be one of the strongest and most stable moving average that determines a rebound point. All right, so that's huge thing. We also see the MACD momentum, the green candlestick histogram actually increasing, so suggesting there's momentum of buying momentum in the market. So that's why I really actually entered into the stock already. So that's why I have positions in it already. So yeah, and but thing is that there's a huge headwind that's coming up, which is the G20 Osaka Summit, which is happening next week. So this one, if trade talk fails, all stocks, regardless of all sectors, will also drop lah. So that's why Raytheon also drop also lah. Okay, but the thing is that right now we're trying to take advantage of the tension in Iran, plus because they're actually sending out missiles, shooting missiles here and there. Potentially plan to shoot missile from the US side, and then the drones were shot down by Iran, and US drones were shut down by Iran, right? So that's a huge tension over there. Plus, look at all this candlestick and look at the potential merger, how much money it can bring in for Raytheon and United Technologies. That's why I see it as a huge opportunity to actually enter the market. Even today, the stock tried to actually go below back this 200 exponential moving average, but it just can't break below. It's just pushing higher and higher and higher and higher. All right, so now, if you'd like to learn more about price action, looking at candlesticks and determine how to move, right? How should you make an entry on the stock or exit on the stock? Now, here's what I'm going to do. I'm actually going to create this event page here where you can actually join in. I'm going to set it all the way to 2023, so it's actually a full thing. The reason why I'm setting up this is because I can leverage on Eventbrite platform to send out emails to you guys and to update you guys on when the course is going to finish. Now, I've actually already started making on the slides and everything, but I just haven't had the time to complete it yet. So once I'm complete, I'll probably drop you an email over here directly on Eventbrite, because they allow me to send free emails. Alright, so once again, thank you very much for tuning in. This is Yongik. I hope to see you next time. Bye bye.